we found 115 new insider trades, almost all of them totally useless, but we'll look through them all to find those handful that are high signal and can help us outperform. Let's take a look. Actually, a relatively bullish day here with over 50% of the insider trades coming in that were purchases. You'll notice I redid the dashboard here, also got us the new chart over here for insider sentiment. I did actually change a little bit, updated how we kind of calculate these charts. So now we filter out a lot more trades basically to sort of get these numbers, to try to filter out more of the low signal trades and only focus on those ones that actually might have some signal. So as you can see here, we've got a pretty good day, one of the more bullish days we've had recently, which also actually for the whole month, well, obviously a fairly bullish week, but then for the whole month, we're closing out the most bullish month that we've had here in October at about 42% insider trades that were purchases, which will be the highest we've had since back in April when with the whole Trump tariff situation, when the market tanked and we were well over 50% of the insider trades that were purchases. And then obviously on kind of the rolling sentiment, we're sitting pretty nicely just above the bullish threshold there, right? Kind of in between bullish and very bullish. Obviously, again, this big old spike back in April that we've been still kind of coming down from a little bit, but settling nicely here in what is a pretty bullish situation, and even, maybe starting to upturn a little bit here after a pretty strong month of October. So let's go take a look at the insider trades at CEOwatcher.com. Set this to bullish. Let's look at the most recent trades that have come in. Let's do a purchases there, and then we'll sort by transaction value, and let's take a look through here. So we've got an IPO here, which we can just skip pretty quickly. Novo Holdings buying MapLight Therapeutics. Now here we move on to an insurance company, Everest Group, which we can see took a bit of a hit. Obviously, insurance companies aren't typically, unless something goes terribly, terribly wrong, or I guess terribly right, though that's less common, gonna have huge dips or huge volatility. But this is a pretty sizable 10% dip here just because of poor earnings, and then they also got knocked down quite a bit from just a handful of analysts downgrading them basically because of those poor earnings. Let's take a look at EG. I guess first we should look through the individual filing itself, so we can actually see a couple of insiders here buying the stock. We have a director buying, and we have two directors buying, I guess. This director increasing his holdings by 300%, so certainly notable there. $950,000 of purchases. Looks like no real track record here, so first ever purchase, also notable. Then looking at the other director here, looks like an okay track record here. 5% 1 year, 2.5%, 3% over 3 months and 6 months. Not particularly good. I mean, at least they're not down, but not particularly good. Let's see how big this purchase is for this guy. He's got a handful, 5 different purchases, it looks like. By far his largest one, almost 2 times larger than all the other purchases he's made. So that is notable. So we've got a first ever purchase. We've got a largest purchase ever after the earnings dip there. So that is all quite notable. Take a look at let's do the news real quick just to look what's going on here. See, one of the insider filings came through. I don't know why they don't get all of them, but we see a bunch of analysts adjusting price targets, moving price targets down after the poor earnings report, which we're going to have to scroll through a bunch of downgrades here to see if they talk about. Let's take a look at what went on with earnings. That's not going to help us. Maybe this one? No, this one. Any of these news going to tell us? I guess we'll have to go look at maybe look at a press release instead. Though normally I like when they tell you what is going on here. Let's see. Earnings. Nope, doesn't look like we're going to get any better info there, so we can just take a look here and maybe see what was going on. Net income, total shareholder return. Don't care about much of that. Two of the main things that we'll take, I'm just going to look at my notes instead of scrolling through all of this, is that there's two main takeaways, but I'll focus on one, which is that they're agreeing to sell their retail commercial insurance renewal rights to AIG because they want to focus on reinsurance. So that's also another good sign. We see, a dip by, and then now we're seeing some not really restructuring, some refocusing by the insiders, which is always a positive, which here I guess is that press release right here. So they're selling the retail commercial insurance business, so that is good to see. They're also entering into an adverse development cover, providing $1.2 billion of gross limit across 2 layers, supported by a long tail re, which I don't know the insurance business very well, so I'm not 100% sure what's going on there. But overall, it's pretty clear that the company took a hit on earnings here, gapped down a bit, starting to recover now, and you've got the insider buying, and you've got them refocusing on their reinsurance business. And then on top of that, I believe they also mention, let's see if we can find where this might be. They also mention share repurchases. They didn't do any, but they expect to resume quote unquote meaningful repurchases in Q4, which also would be another bullish sentiment. So a 10% dip doesn't normally qualify as a huge dip, kind of just in the world of stocks, but in a large $13 billion insurance company, that is certainly a sizable dip. Then you've got the insiders buying the stock on top of that. Then you have the fact they're also actually trading, semi-low, which they do actually mention. If you were to read the transcript a little more, they do mention that they are trading below 1x price to book, which they are. You can see they just dipped down below that after this earnings crash, and so they view that as an attractive price to buy the stock. So not the most compelling type of company, at least for me. 2.5% dividend yield. Not a big insurance guy, don't know the industry very well, not my type of stock, but I think the overall setup, just from the insiders buying the dip and the refocusing and all that, the repurchases and trading at a relatively low valuation, all of that sets up for actually just a pretty compelling one. One of the main types of insider purchases that we like to see are those value dip buys. So that is actually quite an interesting insider trade if you're into the insurance company. Moving on to Celestica, we have something on the totally opposite end of the spectrum here, which is a data center company on an absolute tear, up 400% in the last year. We can see over here that there's been literally no insider buying at all by anybody at the company until this director coming in and buying $2 million of the stock. Also, historically, she has never bought the stock at Celestica before. It looks like she's made a couple of previous purchases here from some other companies that have worked out pretty well. She's 3 for 4 on her previous trades. It looks like Goodyear tires didn't go particularly well for her, but her stock went down 30% after selling Papa John's here, and then also up 50% and 37% in the following year after previous purchases of AIG way back in the day. So first purchase in quite a while. She doesn't purchase all that often. First purchase, it's kind of interesting to see somebody going from Papa John's, AIG, Goodyear tire to a data center company. But let's see if there's any other news here. Not any specific news. This is just clearly a momentum play right here. We don't often see, it's not the most common type of insider purchase with a stock just on an absolute tear and then continuing to get more insider buying. It looks like they got another nice little 3% start to the day. To me, look at the earnings estimates growing like crazy, shooting way up, which we then also will look at their earnings call, which we can see what the numbers they have. And they had 28% revenue growth, 52% adjusted EPS growth, which exceeded the high end of their guidance, highest quarterly margin, plus 100 bips adjusted gross margin. All fantastic numbers. Didn't repurchase any stock, obviously, which again, this is a momentum play, not really a value play, so I'm not surprised they're not rebuying stock there. If we then look at guidance, they are guiding to 30% or 40% EPS growth year over year, so that is pretty insane. Just massive growth. If we go look at the chart historically too, obviously they're getting very expensive compared to their historical norm. However, they are growing crazy fast. So even at a 44x PE ratio, if they're growing EPS at 40%, right, that's just 1.1. That'd be a PEG ratio of 1.1, which a little high, but nothing too crazy there. So honestly, it's not nearly as overvalued as the charts would make it look, in my opinion, assuming that they are able to maintain the growth, which they do say they see through to 2027, and they don't see demand slowing down at any of that time, which obviously, considering they're estimating that EPS growth is going to go up 40% next year. So to me, this is clearly a momentum play. I would like to see this come down though a little bit before I decide to get involved. You can see it kind of tends to bounce off the 20-day EMA there, and we've gotten way above it, which is one of the higher amounts, one of the bigger gaps between the 20-day and the stock price that we've seen in quite a while, actually. So to me, I want to just wait. I'm going to wait this one out and see. Hopefully it falls back down somewhere, here and can meet up with that 200-day EMA somewhere around the 300, 320 mark, 310 mark, somewhere around there. And then I think that'd actually be a pretty interesting play as a momentum play. As long as they keep hitting on those top line numbers, as long as the AI story stays strong, there's nothing that should really slow them down over at least through 2026. So that's another interesting play right there. On the other end of the spectrum, we normally see insiders with more momentum play, so fun to see something on the other side. We've already looked at this. Lynx Capital, 10% owner, buying more of Cullinan Therapeutics. They bought them quite a few times, but they have horrible returns here, negative 50% 6 months, so we can skip over those. Saba Capital continues to buy ASA Gold, which we've seen quite a few times. The CFO here at Sonoco Products, another company down about 20% in the last year. Looks like he's making his first purchase in at least 2 years. If we look at his track record, it doesn't look very good, so we're probably going to be able to skip this one pretty quickly, but we can see if anybody else is buying. Doesn't look look like any selling, not much selling really. Obviously some pretty well-timed selling back here in 2024 and some also pretty good selling there towards the end of 2024, beginning of 2025. Then it looks like some insiders tried to step in and start buying, but that didn't work out as the stock is still down another 20% since then. So it looks like we actually have two different insiders here. John Haley, a director, and then this Paul guy, that's the CFO. The CFO, terrible track record of returns, which we can look into a little closer. And then here, John Haley looks like not much better, at least not horrible returns, but don't look any better here. We can see only really one previous purchase, I guess, back in 2022 at American Woodmark. Obviously, that didn't go particularly well. He did time his sale fairly well here at Top Build Corp, though, so maybe some slight bonus points from there, but overall, I don't think I can rank that insider purchase particularly high. Here we've got John Haley, who has bought the stock a couple times, but they're actually both just earlier in this year, and obviously those aren't going well, so unless things turn around, his currently green returns are not going to last very long, because that looks like that'll turn around here. As far as the purchase size goes, same size as the previous ones. Overall, I mean, we do have a couple of insiders buying. We do have a little bit of a dip here, though, again, 20% in the last year is not quite a threshold. It's a little lower than what I'd want to see for some legitimate dip buying, and these insiders, their track record just not quite good enough for me to even really want to take a deeper look at it, so mark that as a pretty quick skip on that one. Moving on to Universal Health Realty Income Trust. Per usual, I tend to ignore these income trusts aren't for me. If you are an income investor, a dividend investor, then maybe you could take a look here. Looks like he's made quite a few purchases since 2020. Overall, doesn't look like he's done particularly well on those purchases. Let's see, it goes down to here. So overall, his most recent one actually seems to be working out okay. Which one was that? That would have been about a year and a half ago. But that one, so very well-timed dip buy there when he was buying the April, the tariff dip back then. But besides that, not a good track record for this guy, and both not a good track record, but then also just not an industry that I have much interest in. So for me, that's a pretty quick skip. If we look at the purchase size, it is his largest purchase ever. So that is by 2x. So, another maybe feather in the cap there, or another check mark or bonus point, or whatever you want to call it. For somebody, if you are a income investor, maybe worth taking a look. But we see a lot of insider buying at these income trusts, at these real estate funds, at those kind of things, and not for me. Next up, we have Western Alliance Bank. We also see a ton of banks, which is also annoying, as I'm not particularly fond of banks, but look, we can do a quick look through here. Terrible win rate by the CFO here. Let's see if we can see any other. Looks like his purchases, I guess we can maybe go take a look, just because it looks like his purchases are not, or they're just over 2 years ago. So these are all his purchases. Nailed it one time. one perfectly timed purchase back in COVID, and terribly timed purchases throughout the rest. So that's another pretty quick skip here. Now, Integer Holdings is a massive dip that we can see right there. Let's open up. Let's first take a look at here, just see at the actual filing. Nothing of note there, so that's just a normal insider purchase. Can head over now to the actual stock itself, down 50% in the last year and fell from 109 to 63. So another 40% plus dip just in the last, just in the last week or so. So absolutely got crushed on earnings, which we can take a look at. Pretty well-timed insider selling by some insiders here, but no insider buying for over almost 3 years since we've seen a last insider purchase. $200,000, 15% increase is pretty good size there. Looks like he's only ever once before sold the stock, and didn't really work out in the short term, but obviously now with this massive drop, that sale has worked out. But this guy's actually recently promoted to the CEO here, because their old CEO retired, or maybe was told to leave. But he obviously, things need to turn around here. So now you've got a new CEO stepping in, the CEO buying the stock for the first time, a 15% increase in their holdings. All of that is pretty notable. I do think the thing you have to worry about here is just like this stock has been getting crushed. If you are looking at this as kind of a turnaround play, which would obviously be the case here, a big old dip buy, which we do like to see, it would probably be most prudent to wait for this 20-day again to catch up down to the stock price, so you're not getting caught buying, a falling knife here. You might as well wait for it to turn around. However, CEO purchases have been catching a little bit of buzz, have been catching a little bit of attention recently. So that's probably why the stock is so far up 1%. We'll see if that helps actually turn things around here, or if we still have a little bit more of a falling knife to go. But then if we look here historically, I mean, we're trading at pretty close to all-time lows here. We're all the way down at like COVID levels, basically. We're all the way down to COVID earnings here. And then before that, it was all the way back in 2016. So trading at a very low PE ratio, which which, I mean, they got hammered on earnings, and I think they got hit a lot worse than people were probably expecting. The stock went down more like 20% right after earnings, and then has just fallen another 20%, which is kind of unusual. So maybe getting a little ahead of itself there in terms of how big of a dip we have. Overall, I'd say this is a pretty high signal insider buy because we have this dip buy and we have the CEO buying the stock for the first time. And then as far as valuation goes, you then have the low valuation, the low PE ratio for the stock, and then you also have a new CEO coming in and stepping in, which that new blood can always be useful. Just some quick notes on the stock here. It's a CDMO, a contract development and manufacturing organization for medical devices. Obviously, it looks quite cheap right now. They had to lower guidance, which they claim is a short-term. I believe they had some short-term sales headwinds. Let's see where they tell us here. What is driving the 3 to 4% sales headwind in 2026? So this is the problem, is that they had to lower guidance. So they had to reduce the midpoint for organic sales growth here. And it was because they had 3 new products with slower market adoption than they thought, which is then causing their clients to reduce their forecasts. And so now, because of that, obviously this CDMO then has to also reduce their forecast. So they claim it was basically a shorter term headwind where a confluence of multiple different clients at the same time having to lower guidance because of these multiple new products all kind of not working very well at the same time, which is just unusual. Normally you'd have that happening to one at a time. So they claimed like all of these happening just came with a huge, gave them a big sales headwind that they weren't expecting, forcing them to really lower the guidance there, and then you can see they just became aware of these issues in Q3, which is why they didn't let the market know before this earnings. And then they came out with a huge surprise to the downside. But they mention, let me see, they believe the sales headwind is only going to be in 2026, and they believe it will subside in 2027 due to a robust pipeline and multi-year customer agreements. So as you can see here, the current multiple large forecast revisions in a short period are unusual and not expected to recur. The long-term outlook is basically, this is a guide for 2026. They're going to get slammed in 2026. Obviously, hopefully the market has already priced that in with a massive 40% dip. And then they say they believe they're going to return to above market growth in 2027, supported by a robust pipeline and multi-year customer agreements. So most of their sales are coming from agreements that are many years long. And, in theory, you should be able to forecast pretty well, though obviously they just got crushed here on this one. So management team thinks they're going to be able to, this is just a short-term headwind, trading at a low valuation. You got a new CEO coming in, you got a new CEO buying stock. All of that lines up for a very, very compelling insider purchase, in my opinion. Again, this case probably just be nice to wait for the 20-day EMA to come down here and catch up before trying to take a stab here. But, we've started the day a little bit green, and maybe the CEO purchase will catch enough attention to kind of start to turn things around. What else do we have here? I think that was most of the compelling insider purchases today. There are a handful that I just wasn't able to get to look at yet. So WDFC, did we look at WD-40 yet? I don't think so, actually. So WD-40 is one other one that we actually did talk about a couple days ago, but as you can see, we talked about it only when this one insider bought the stock, and now we've got 5 more insiders joining in on the buying. And if we take a look here, we can see multiple insiders buying the stock, no previous insider purchases, or very, very few over the last couple of years, and none in about the last 6 months. Multi-time sales back here. As far as group insider purchases go, the only time really before we've seen group insider purchases was back here in 2023, where we had 4 insiders buying the stock in April, and then the stock went up 35% in the next year, 25% in the next 6 months. Also, looking at these insiders here, they actually have pretty good returns all around. The CFO here, 15%, 15%, 15%, 3 months, 6 months, 1 year. We've got a president and CEO here who's got 7% 1 month, 13% 3 month, 20% 6 month, 32% 1 year. We have the general counsel, 25% 3 month, 12% 6 month, 35% 1 year. We have a director, not quite as good here, -4%, +8%, -7%. And then lastly, we've got another director here with 1%, 12%, and 27%. So overall, these all average up to about actually 22% 1 year returns for these insiders. So now you've got multiple insiders buying the stock. Again, the company's down 25%, which isn't particularly crazy for a company, for the general stock market, especially with how volatile it's been. But for sort of this stalwart of a company that's a $2 billion company in a consumer staples, a 25% decline is pretty notable. They also did actually have a very, very nice pop after earnings because they were able to raise their guide quite a bit, as we can see here, up above the FactSet estimate of about 598, and they did beat earnings as well. Let's see if I said exactly why. I didn't take a look at exactly why they beat earnings, but they got a very nice, they went from, what do we have here? Somewhere in the about 190 all the way up to 215 or so. So they got themselves a nice 13% dip and then have given it all back since then. So unfortunately for them, but now you've got all the insiders buying this fade after the pop post earnings, and that turns this into a pretty compelling insider purchase situation with all of that group buying, a good track record of those insiders buying the stock. You also now looking at their PE ratio, we're trading pretty low here. See if we can go back a little further. We are down around, I mean, we're on the bottom end of this kind of, similar to before. They're actually below where they were during COVID, but they're back down to where they were back in about late 2022 and then back in 2017. But this is clearly on the lower end of their PE ratio. So they also did mention they're going to accelerate their share repurchases. They have $30 million left on that plan, and they're going to knock all those out in fiscal year 2026. So overall, another just kind of value dip buy here by a bunch of insiders at a low valuation. Very, very compelling insider purchase. I do think similar to basically all the other ones we've looked at right now, if you were playing this intelligently and you were timing your entries properly, you'd probably wait for at least the price to get above the 20-day, if not wait for it to, as you can see, it's smacked into this 50-day quite a few times, so you could actually wait to see if it's gonna get above that 50-day before taking a stab. But this is it's gonna be a long-term play. Kind of regardless if it works out, it should be fine, even if you get in at, getting in at 190 versus, 200 isn't gonna make that big of a difference, or if the stock falls a little more, and you can get in at, let's say you can get in at 185 or something. At the end of the day, it's not gonna be a huge difference, most likely over a multi-year hold or over a long-term hold, but you might as well try to time things properly and not fight the tape, not fight the momentum here. So in that case, probably makes sense to wait a little bit for it to get above some of these moving averages there. Overall, there's a handful of other interesting trades I just haven't had time to look into yet, but we'll be looking into them, and then obviously we'll share any interesting findings in the daily email and in the Discord channel. So you should go to ceowatcher.com and sign up so you get access to those. But if you're into banks specifically, we've got like an insider here at Greene County Bank, which I've looked at enough banks, I'm kind of over them. 12% 3-month returns, 20% 6-month, 28% 1-year returns. Seems to have quite a few trades that he's made before. The CEO buying the stock, so that's certainly notable. I believe there's another bank here with some decent insider purchasing. You've got another director here buying the stock's down a decent amount, and he's got a pretty good, not quite as good, I guess, but 10% 6-month, 10% 1 year. Nothing to scoff at. I'd definitely go take a look at all of those, and you can go to ceowatcher.com, sign up for everything, see all the top insider trades. Don't forget to like and subscribe. I'll see you next time.